NVIDIA stock has dropped over 30% since January, but are we finally about to see a turnaround? The stock dropped further last week when NVIDIA CEO Jensen Huang said NVIDIA will take a quarterly charge of about $5.5 billion tied to exporting the H20 GPUs to China and other destinations. The ongoing trade war and Trump's China tariffs have tanked the market so far this year, but an end could be in sight after Donald Trump just said this.
Listen to what else Trump said about the China tariffs.
This week we saw Chinese President Xi Jinping visit with 3 of our allies. Should you be worried that they're growing closer?
No.
Mr. President, will you pick up the phone?
Nobody can compete with us. Nobody.
You said that there was a relationship with President Xi. Why not pick up the phone and call him and make a deal?
Oh, we're going to make a deal. We'll have a deal. I think we're going to make a very good deal with China.
So guys, if China and the US do make a deal, this will have a huge impact on the stock market again. But what will this mean for NVIDIA? Institutions have been loading up on NVIDIA stock. Recent analyst price targets are far above the current price. Is NVIDIA stock a buy right now? Now we've got a lot to get through in this video, so I will try to keep this intro short. But if you find any value in this, can I ask you to smash the like button? It literally costs nothing, but it helps me out so much. I'm aiming to get 500 likes on this video. Help me hit that goal. Subscribe to the channel if you're new and hit the bell notification so you don't miss out on any new content like this. I want to point out that I'm not a financial advisor and this is not financial advice, so always do your own due diligence and try to answer the question later in this video. But for now, let's get straight into it. First of all, it's worth noting that the global AI market is expected to reach 1.81 trillion by 2030. And this is considered to be the revolution of the digital age. Tech giants such as Amazon, Google, Apple, Facebook, IBM, and Microsoft are investing heavily in AI research and development. But the truth is that one company stands head and shoulders above everybody else in the AI market. And that company is NVIDIA Corporation, ticker symbol NVDA. NVIDIA Corporation ranks among the world's leading microchip manufacturers and is best known for its contributions in the fields of graphics and gaming. Its chips and related software power the fastest, highest resolution graphics and are featured in a line of products that include solutions for all end market users. Along with gaming, NVIDIA microchips are used in visualization, data center AI, and autonomous vehicles, to name just a few. Now, although NVIDIA has become a household name over the past 2 years thanks to its insane growth of over 1,000% in less than 2 years, this is actually a mature company. Now, NVIDIA had been going strong for the past few years. But wow, the stock is really beginning to divide opinions right now. From people saying that NVIDIA optimizes excellence and that the company is a strong buy, or on the other hand, that NVIDIA is a strong sell and that things will only get worse for NVIDIA from here on. Retail investors seem to be the most divided, but Wall Street, on the other hand, is very clear on its opinion, which I will talk about in a moment. Now, some of the pessimism surrounding NVIDIA lately has to do with increased competition from major rivals like AMD and Intel, as well as possible spending cuts on data centers, which accounts for the majority of NVIDIA's revenue. But like so many multinational companies right now, the main issue is tariffs and a trade war. In the past week, NVIDIA said that it will take a quarterly charge of about $5.5 billion tied to exporting H20 GPUs to China and other destinations. On April 9th, the US government told NVIDIA it would require a license to export the chips to China and a handful of other countries. But this isn't exactly new. This goes back a few years. During President Biden's administration, the US restricted AI chip exports in 2022 and then updated the rules the following year to prevent the sale of more advanced AI processors. The H20 is an AI chip for China that was designed to comply with the US export restrictions. It generated an estimated $12 to $15 billion in revenue in 2024. Now, this is a very interesting article. Every NVIDIA investor should keep an eye on this number. As we know, AI has taken the world by storm, and NVIDIA is one of the most important companies powering the development because its GPUs is the go-to for training AI models. That's why all NVIDIA investors need to keep an eye on the company's data center revenue. It's directly tied to its AI dominance and growth potential. Data center revenue, which includes GPUs and other hardware, is now NVIDIA's largest business segment. In the fourth quarter of fiscal year 2025, NVIDIA's data center revenue grew 93% year over year to $35 billion. Now, we shouldn't expect data revenue to keep growing at 90% quarter after quarter, but any huge drops in growth could be a red flag that demand for AI infrastructure is falling. Paying attention to NVIDIA's data center revenue can help gauge whether the AI boom is progressing, becoming stagnant, or fading. In either case, that could affect NVIDIA's value proposition. So what do analysts think of NVIDIA stock right now? Looking at MarketBeat, we can see that the consensus price target across 43 analysts is $165, with a high forecast of $220 and a low forecast of $102. Now, this is an incredible situation that we don't usually see with companies the size of NVIDIA. Even the lowest analyst price target here is above the current price, so every single analyst believes that the stock should be higher than today's price. Now, this is set by 43 separate analysts who have issued 0 sell ratings, 5 hold ratings, and a whopping 38 buy ratings. So we can see that Wall Street's opinion on NVIDIA is solid. The stock is undervalued now after falling so much in 2025. And we can further see that here. Over the past 3 years, analyst price targets have been rising, and so too has the share price. But suddenly we have this divergence between the two, where the analyst price targets are still going high, but this stock has begun to fall. And these price targets have been set recently too. In the past week alone, we've seen a whole load of new analysis. But the common trend here is that NVIDIA stock is a buy, with price targets far above the current $100 price, ranging from $160 up to $200, which is incredible upside of nearly 100%. It's very unusual for a company of this size. Now back to the most important question. Is NVIDIA a buy? So GPUs are incredibly popular among tech companies trying to build AI offerings for their own users. And NVIDIA is powering that trend. NVIDIA has taken a commanding lead in the AI chip segment, where it holds the vast majority of the market. And NVIDIA should be the major winner as the physical AI revolution unfolds. Now this is important. Generative AI is only the most recent chapter in a longer book. In his keynote speech at Computex 2024 event, Jensen Huang said, "The next wave of AI is here. Robotics powered by physical AI will revolutionize industries. Through hardware and software innovation, NVIDIA is positioning itself to be a big winner as autonomous machines become more prevalent." NVIDIA Isaac is a robotics development platform that lets engineers build applications for industrial manipulation arms, autonomous mobile robots, and humanoid robots. Additionally, NVIDIA recently introduced Isaac GR00T, a customizable model. GR00T will accelerate the design of autonomous humanoids, a market Citigroup says may be worth $1 trillion by 2040. Meanwhile, Wall Street expects NVIDIA's earnings to increase by 38% annually through to fiscal year 2027. That makes the current valuation, a PE of 30, look cheap. So finally, the tariff dip has provided opportunities. Tech stocks have taken some of the biggest hits. The Magnificent Seven are all trading well off their peaks. It looks like the narrative of the AI boom is looking less compelling in the face of broader macroeconomic concerns. Yet NVIDIA's valuation might be too tempting to ignore. The stock trades right now at a forward PE ratio of just 25. It has rarely been close to that cheap in the past couple of years. However, increasing your portfolio's exposure to the AI trend by opening a small position in the leading GPU provider now makes sense. So guys, what do you think? Is NVIDIA a buy right now that we have a dip, or do you think that this tariff dip is not just temporary and will continue for a lot longer, causing some of the most valuable companies in the world, think of Microsoft, Apple, and even NVIDIA, causing them to drop much further than the current price? Let me know your thoughts in the comments below. Remember that I'm not a financial advisor and this is not financial advice, so always do your own due diligence. But if you like this analysis, then please like and subscribe. Follow me on X and I'll